Welcome to Kaiser Report Summer Solutions with Steve Keen. Coming up, Professor Keen's latest book is called Can We Avoid Another Financial Crisis? Today we're going to talk about a solution to financial crisis. Steve Keen, how you doing?
Very good, mate. I'm glad to be on the show.
All right, now, Steve, we used to have business cycles. Now we have financial crises. Which is more damaging?
Well, financial crises. I mean, if you want to make an analogy between business cycles and human health, then that's like your pulse going up and down during the day, your biorhythm changing. A financial crisis is like a heart attack, and it's damn sensible to avoid them and not to create the situations that make it more likely. Unfortunately, we've had regulators and bankers that have all made it more likely we're going to have the financial equivalent of a heart attack on a regular basis.
But the top of the socioeconomic pyramid seems to benefit hugely with the crisis. So the 2008 crisis, you had people with $10 million were able to make $50 or $60 million with the inside information passed to them from Goldman Sachs, for example, that they would be getting a bailout. And this type of asymmetric warfare between those on the inside and those who are not on the inside. Is that a fair statement?
Absolutely. That's one of the problems about the scale of government spending that we have now, which is about in terms of when you look at the size of the government compared to what it was before the Great Depression and the Second World War, government spending is about 5 times as large as it was back then. But that's had a positive benefit in the sense that it's meant that when there has been a downturn in the private sector, the government spending has gone up and balanced it a bit. But the negative side is twofold. One is that the level of private that's been generated by this sort of backstop for the financial system failing by the government is far higher than we've ever had in the history of capitalism beforehand. So we've got a bigger problem that way. And the second thing is, this is really the point we're alluding to, because the politicians have become so used to having an enormous financial sector as what they think is a natural part of their economy. They eat with financial people. I think they sleep with financial people. They're certainly getting done by financial people. And they can't imagine the world without a large financial sector. So when you have a crash, whereas in the 19th century that might have meant whatever the corporation involved got wiped out, and that was they end up in rags rather than riches. Here, they throw rags at them called large amounts of government money and rescue them, and they end up making a fortune out of the crash that they caused in the first place. So we have what I these days refer to it not as the military-industrial complex, but the financial-political complex.
So you're saying that quantitative easing happens when 2 central bankers make love?
Well, I think they might be doing something that involves sex, but I don't think it's love.
Oh.
But yeah, that's classic. I mean, this is a classic case of where economists not understanding capitalism leads them to doing policies which have some moderate impact. So there's no way the QE was a complete failure in terms of stimulating the economy, but it actually ends up making the symptoms of the crisis worse. So one thing that the huge increase in private debt did, of course, in America was cause the subprime bubble, driving up prices both of houses but also shares. And then what do the economists and central banks think is a good idea? Let's make share prices rise so we have people spending more out of their assumed wealth. And so the symptom was higher asset prices. The cure is higher asset prices. So I think that's something like sex, something not a particularly functional version.
All right. You know, Steve, I'm often amused by this term moral hazard, which is used by economists and bankers to describe what happens when you let banks commit too much fraud, or you let bankers ease too much to cover all the crimes on Wall Street. And these are the same folks that if you tell them, you know, maybe we should consider universal basic income, will tell you, no, that would make people immoral. That would make people shy away from the work ethic. That would take people's entrepreneurial spirit away. But at the same token, these same people say, we're bankers, we hate working, just give us free money, and then we're just going to buy assets and speculate, and if we get a problem, you'll bail us out. So there's a moral division in the world. Those at the top have no morals at all. They quaintly refer to it as moral hazard. And everyone else seems to be bound by the law, bound by ethics, bound by morals. How do we come to a place where you have a 2-tier globe, those who have to pay attention to morality, and those at the top who simply think it's an inconvenience?
Yeah, I mean, it's an appalling situation to be in, and it's no wonder people have started mistrusting what they see as experts. because it's actually, I still trust engineers, I still trust doctors, and I trust scientists. I've never trusted economists. And now they're caught up with this weird world in which, again, using this line about moral hazard, they stop poor people getting a basic income cover, and at the same time ignoring moral hazard, they let financiers get away with blue murder. So it really is it's insanely unbalanced, and it's no wonder people are saying, I've had enough of this, and I want to throw a human hand grenade into Parliament rather than voting for somebody who's going to do a better job.
Yeah, figuratively speaking, of course. Now, the business cycle used to be a natural solution to bad business practices. Now we have the problem of governments intervening to mollycoddle horrible businessmen, as we've just described. And now, is there any solution that people can devise to circumvent the policymakers? That is to say, push maybe for state banks, or maybe migrate to Bitcoin? What do you think, Steve?
I think we need a diverse financial system. This is definitely one of the things we need to have, because if you look at the whole pressure of conventional economic policy and the politicians as well, was in terms of aggregating financial systems and breaking down distinctions between different parts of the financial system. So the whole idea of the Glass-Steagall Act, where there were the retail banks lending to one group and commercial lending to another, and you had the savings and loans and so on, and they all had separate little parts of the ecosystem. You think about the financial system is like an ecology. That's like having a diverse range of different types of potatoes. What we instead had under this, first of all, mainstream economics, which just basically treats finance as a magic wand and everything is perfect, and we let the financial sector make sensible decisions. They'd also supported all the aggregations we saw. Bank of America being taken over, and getting a smaller and smaller number of very homogenized giant corporations responsible for lending everywhere. Savings and loans being abolished as well. That is a bit like, and I want to make this analogy fairly emphatically, this is a bit like saying, let's just bring in one type of potato into a country called Ireland and see what happens. And what happens, of course, you've got a potato blight. You wipe out the entire crop because you don't have a range of different genetic types there. Exactly the same thing in finance. If we had a diversified structure of different types of financial institutions, some of which can lend to corporations, others lend to households, others lend on housing, that diversity would give us some chance to survive a downturn. Instead, we only have this uniformity and mass scale uniformity at that, and you get a breakdown.
Right. The comparison to agriculture and ecology is a good one. The rise of the monocultures in the ecology has bred all kinds of problems. I mean, obviously the potato famine is one example of that. You have similar situations with huge banana plantations that are cultivating one species of banana. They're open to single point of failure. Something comes along, there's no diversity. And you would think that in a capitalist society, the idea of competition and diversity would be well understood, but instead, the mainstream financial press keeps pushing this idea that a monoculture, basically there's one trade, borrow cheap from Japan and buy assets on the expensive side, and repeat over and over and over again until such time as would be the case of a potato famine, you have wide-scale economic duress because there's no competition. So is it fair to say that this economy does not encourage competition?
Absolutely, and this is one of the dangers. I mean, this is something which Adam Smith himself wrote back a long, long time ago, saying that businessmen rarely get together without the topic turning to conspiracy against the public. So to some extent, you need to have some systems to stop capitalism completely aggregating. At the same time, you have industries like the computer industry, for example. The real growth firms in the computer industry didn't even exist 40 years ago. It was the fact they could see these enormous profits out of the IBM and the bunch that meant that companies like Compaq and ultimately Microsoft and co turned up. So there's one way which capitalism has a sense of renewal of competition. There's also potential for major monopolies to come about at the same time. And what I think that hasn't been appreciated by policymakers sufficiently is competition doesn't mean we all do the same thing. Competition means diversity. And in finance, that diversity has been eliminated, and therefore we have a single point of failure. And you might as well go from, it doesn't matter which bank you go to, they're all going to give you an irresponsible loan. But if you had the diversity which we used to have, which Glass-Steagall partly tried to maintain, then we wouldn't have this systemic breakdown out of a financial crisis.
All right. When I started on Wall Street in the 1980s, early 1980s, there were dozens of brokerage firms all over the country, wirehouses as they were called, Payne, Weber, Smith, Barney, the list goes on. And now they've all been gone. They've all been absorbed. They've all been turned into a few key players, and they collude. They monopolize. They extract. They prevent competition. It's completely non-competitive. And, of course, now we have Bitcoin coming along, which seems to be an alternative to all of this. Does Bitcoin factor in your view of things at all, Steve?
It does a bit, mate. I'm just a bit, the technical sides of Bitcoin get to be a problem. I mean, the fact that it's based on an analogy to gold, 21 million Bitcoins and that's it. Yes, okay, the supply of gold on the planet is limited. And to produce more gold, we need to find a couple of neutron stars to collide with each other and have the detritus smash into our planet. That's not going to happen. But, of course, anybody can start a new digital currency. So there's no longer the analogy breaks down, and then the amount of time it takes to process that the unique code for the hash tables and so on that are involved, the amount of 10 minutes to process to verify a transaction, it's not a basis for a stable currency yet, and it's also far too volatile in price. I know people are celebrating, and justifiably so, for the increase in the value of their Bitcoin, but money is something you can take down to the shop and walk down with a certain amount of money and know that's going to be the price of milk when you get there to buy it. You don't want it to double or half in price as you go for the 10-metre stroll to the corner shop. So there are some ways in which it doesn't meet those characteristics, but what it does give you is an alternative way of doing transactions when the private credit system is breaking down. And I'm all for systems like that right now, because the people managing the credit system, A, are making it worse, and B, don't understand it in the first place. So parallel currencies, Bitcoins, all the other systems of ways of transacting, we need them right now because we have a bunch of morons in charge of a system which has been turned into a monoculture that should be a diverse one.
All right, Steve Keen, thanks for the summer solutions.